How to get started day trading in 2026. So tonight's roadmap, what we're going to do is we're going to start by going over like trading 101. So that's really what day trading is, what sessions are, what futures is, and then the three pillars. Then we're going to go to why most beginners actually fail. So the mistakes that, cost people their accounts and make them blow up and quit. Then we'll go to something that I coined the ARC model. So that's my actual trading strategy. So really simply, what is day trading, right? So day trading is when you open a trade and you close that trade within the same day. So you're typically holding that trade within a couple of minutes. It could be seconds, it could be minutes, or it can be hours. But as long as you open a trade today and you close that same trade today, you're good to go. That's considered day trading. Now, that's very different from something that we consider swing trading, which is holding the trades days or weeks or even months. And then long term investing. Long term investing is holding it months and years. So day trading, we're in and out. Sometimes my trades are seconds. Sometimes my trades are a couple of minutes. It's a really quick way to earn money. You lose money the same way, but it's a really quick way to earn money as well. Now, a lot of people typically ask me like, when is a good time to trade? Let's say I have a 9 to 5, I can't trade. That's not necessarily true. So the best time to trade is the New York session. The New York session opens at 9:30. So from 9:30 to about 11:30, 12 o'clock is when it's the busiest. That's when there's the most market movement. That's when most trades happen. And then that's also when the banks and the institutions are actually trading. Now, 11:30 to 2 p.m. is kind of slow. The volume dries up. It's choppy. Most people like to sit this out, meaning the institutions and the pros, they're kind of sitting this time out because there's not much happening. The volume is lower. And then from 3 to 4, the market picks back up. It's really 3 to 5. The market picks back up. And that's when people are getting back in, is like the power hour, the last hour. Now, you can trade any point or any time, but I would say the best time to trade if you're trading the New York session is 9:30 to 11:30. Now, if you have a 9 to 5, you have some other options. You can do the Asia session or you can do the London session. That would require you to be up either early in the morning or you would trade after work. They do come with separate characteristics. So the Asia session is going to have lower volume. It's not going to have as much people trading it, so it's going to move a lot slower. It's not going to push how the New York session will. And then the London session has the same kind of vibe, but is a little bit more volume there. But if you wanted to really trade one and you couldn't trade New York, I would suggest the London session because it gives you a little bit more volume than it would in the Asia session. Now, futures. People always ask me what's the difference between futures and stocks. Futures is you're getting the ability to trade an agreement at a set price by a set date. That's really what a futures is. So you can say, I want to buy a barrel of sugar in 2 months at this price. For us, that definition doesn't really make a big difference because we're getting in and out same day. So we don't really care about the price in 20 days because we're going to get in, make our money, get out same day within minutes. Now, me specifically, I trade the NASDAQ. The NASDAQ is an index. So it's different from stocks because some people trade just one stock, like someone might trade Tesla, someone might trade Nvidia. We're trading the NASDAQ. So Apple, Nvidia, Microsoft, all of those different stocks are inside of the actual thing that we're trading. We're trading all of them at once, pretty much. It's like a whole basket, not a single stock. Now, price, people love to ask me, how much is it? What's the price? The way that pricing works is by contract. So you can trade one contract of a mini. That mini will give you $20 per point. So if the price moves up, it's going to be $20 per point. If the price moves down, it's going to be $20 per point. Very simply. Now, if you trade one micro, it's going to be $2 per point. So if it goes up 2 points, you made $4. If it goes down 2 points, you lost $4. Very, very simple. You can trade multiple contracts. So if I trade two contracts, let's say I trade two minis, it's $20 per point. Now, two minis is going to be $40 per point. And that's how you start to get those bigger gains depending on the amount of contracts that you're trading. Now, the three pillars of trading, there's technical analysis. That's what everyone's going to have to learn to trade because that allows you to read price, that allows you to read structure, that allows you to read candles. Whenever you guys see people that are looking at a bunch of candles up and down, they have red and green candles, they're looking and learning technical analysis. So technical analysis is like the beginning. That's the foundation. That's what you're going to look at first. That's the first thing you're pretty much going to learn. Beyond that, then you're going to learn strategy. There's tons of strategies out there. All strategies work. The one I trade is called the ARC model, but there's a bunch of them. You pick one, you back test it, exercise, see how often you trade it, see how you like it, see if it works for you. Beyond that, if it doesn't work for you, you switch. But caution, you want to pick one and just stick to it because it works. They all work. It's just, does it work for you? Then after that, which is probably the most important, I would say, is psychology. You can get one and two down. If you can't get that third pillar down, you're going to be cooked. Like psychology gets broken down into discipline, patience, your emotional control. When you're seeing that you're losing money, how do you act? When you're seeing that you're making money, how do you act? All of those things are extremely important because the charts are going to reveal you to yourself. So, those are the three pillars. Now, why most beginners fail? So, there's a statistic out there that 99% of traders either quit or blow their accounts in the first year. And it's really not because they're not smart enough. It's not because they don't have enough money. It's really because the pattern, it's just there's a pattern there that they aren't stopping. Trading is a mental game more than it is a physical game. So some of the things that I see that traders mess up with or don't have enough of is number one, they don't get enough practice. People always want to hop in so quickly to try to make money. This is not gambling. You need to understand what you're doing because it's really about pattern recognition. So when you're able to get reps and you're able to practice, then you'll be able to get more money out of the market. So screen time, I've probably spent over 40 hours just on my computer looking at charts and practicing, and it's paid off. Now, number two, and this is something that I mentioned a little bit earlier. If you're a trader and you keep switching strategies every few weeks, you're never going to learn and practice with the strategy long enough to actually see the edge. So that's something that you want to make sure that you do. And I'll show you guys the strategy up next, that the one that I use. And then there's no real system that a lot of traders have. Like they have random entries, they don't know exactly what they're looking for. So they get random results, and there's nothing to really repeat. There's no step by step guide or system to actually follow. And the last one that I just talked about was the emotional part. Like when there's real money on the line, that's when a lot of people are folding. And that's that's where the market will reveal itself to you in terms of how you feel about money. If you have an abundance mindset, it might show. If you have a scarcity mindset, it might show. So you just want to make sure that you're cognizant of that. And I have a lot of free education in here that will kind of help you get around those things. Now, the method that I use that I'll quickly explain, and this is just an extremely high level overview of it, is called the ARC model. So ARC is an acronym. It stands for areas, react, and confirm. So A is the zones where price have reacted before. Now, what that looks like for me is I go on the 4 hour chart. I'll mark up swing highs and swing lows and see where the market actually showed me some reactions. Then, once I mark those out, I'll move on to R. I will wait for price action to actually get to that area. So if I marked out an area and it's below price, I'm going to wait for a price to come down, touch that area, and then continue to move forward. Then confirmation. I'm going to wait for something called a break of structure. And that's just something, it's a simple term and it's very easy to spot on the chart. But whenever I see that, I'm going to actually get into my trade. Very simple. It's 3 steps. I do that every single day. And for those who have followed me, you've seen some of the some of the results. And then if you haven't seen some of the results, you can go into the Discord and look at the wins channel. I mean, you'll see the results there. Now, I get a lot of questions about how much money and time do you need? Money, um, I'll go into that maybe a little bit later in terms of when we hop on a Q&A, I'll answer some more specific questions, but you don't need a lot of money. You can start with $300, you can start with $100, you can start with $500. You don't need too much money, and it's not as crazy as everyone online makes it seem. You can start with a lot less. You just have to have the right broker and know what you're doing. Now, time. Time is the thing that's extremely important. When you're first starting, you want to be able to put in as much time as possible. If you're not able to put in at least maybe like an hour, I wouldn't suggest really doing this. Or I would split that time up across a week. So, for example, you can spend 30 minutes a day for 4 days looking at charts or going through a course or watching YouTube videos to try to get it. This is not a hobby, right? This is something that you can really earn a lot of money doing, and it's something that you can lose money doing. But it's a skill to be honed over time. You don't really want to do this once a week and think that you're going to be good at it. Your results will literally be yielded from the amount of time that you put in on the charts. So a lot of people don't want to go ahead and practice, but if you take 60 days, let's say you took 60 days and you practice an hour a day, I guarantee you that you'll be good, or you'll have an understanding to know how to trade. Quick recap what we covered. We did Trading 101, three pillars of trading, and the ARC model.